There's a lot of bad news out there, but there's one ratio that makes me extremely optimistic about the stock market. In this video, I'm going to show you what that ratio is, how it's calculated, and what it's saying right now.
This video is for educational purposes only. It should not be considered investment, legal, or tax advice. It is not an offer to buy or sell any security. Past performance does not indicate future results. Investing is risky.
In this video, we're going to talk about the insider buy-sell ratio. This ratio tells us how many insiders are purchasing stock compared with selling it. And don't worry, we're not talking about illegal insider trading, which you've probably heard about. An insider is anyone who has a material information advantage about a business that the public does not have. For example, the CEO of a company obviously knows a lot more about that company than anyone else. So if they know that there's going to be a merger, maybe they're going to be selling out to another business here in a couple of weeks, that's something that no one else outside of the company would know. So none of us shareholders have any idea that that's coming. So if there were not laws in place preventing it, the insider, the CEO, could simply go on the open market, put all of his money in his own stock, and then when the announcement comes out that they're going to be bought, the stock would shoot up and then he could sell it, and that could just happen all the time, right? You could just have insiders that would give out bad information, then buy the stock, then give out good information, the stock would go up, then they sell it, give out more bad. It just would be a perpetual cycle. Bad news for shareholders and all profits for the insiders. So there's laws enacted in the 1930s by the SEC that basically require that any insider would disclose when they buy or sell their own stock. So this applies to CEOs, CFOs, board of director members, and anyone that owns at least 10% or more of the company's shares. So why does this matter? Insiders are typically net sellers of their stock. So they more often than not will sell more than they buy. And this makes sense if they have to pay for a wedding or pay for college, or maybe just paying themselves for regular expenses, or maybe they want to sell some stock to diversify into other holdings. There's a lot more reasons to sell a stock, and it may not necessarily mean the stock is way overvalued. It could just mean they have a legitimate use for the money. However, there's really only one reason a CEO or any insider would buy their own company's stock, of which they already have a large personal financial exposure to, and that is that they have a very high conviction that the stock is going to go up in the future. Now, the future may not mean the next month or two, but the CEO is not going to put millions of dollars of their own money on the line if they don't think there's a very high probability that they're going to make money on that investment. So these insider transactions can give us a peek into which CEOs think that their stock is cheap, maybe an opportunity for us to follow them into that investment. But that's for another time. If you guys are interested in seeing a list of some recent insider purchases, let me know in the comments, and maybe I can make a video about that in the future. But in this video, I want to talk about what these insider transactions can tell us about the market environment as a whole. So we're going to look at a chart showing us the ratio of insiders buying to insiders selling. So when this ratio is greater than 1, that means that more insiders are buying than selling. Does that ratio tell us when is a good time to be buying the market as a whole or not? Well, if we look at this chart, it certainly suggests that that is the case. Here is the 1, meaning anything above this line are more buyers than sellers. Anything below this line suggests there are more sellers than buyers. And as you can see, most of the time this red line, so this is the buy-sell ratio here, most of the time this ratio is below 1. However, there are some cases when it jumps above that. So for example, this is in 2008, and sorry, my dates are all messed up here, but this is back in 2008. You can see the ratio of buyers to sellers went above 1. And that signal corresponded with the S&P 500, which is this blue line, basically tanking. So the insiders are typically pretty contrarian, meaning they're buying their stock when everyone else is selling it. So the insider buy-sell ratio was above 1 really from this time period here with a brief break here, but basically around this area, more insiders were buying their stock than selling it. Obviously, that turned out to be a tremendous buying opportunity. It happened again here, and then just barely happened again here. And again, it happened here. This was 2018. And then here is 2020 during the COVID crisis, when the insider buy-sell ratio got as high as it had been since 2008 and 9. So what is this ratio telling us right now? Well, if we just look at all of the insiders, which include the CEO, CFO, directors, and 10% plus shareholders, not all that much. We do see that there is a significant amount more interest in buying the stock versus selling it, but we're not seeing that quite get to this magical 1 number. And I don't know if this is actually magical, but this has tended to be a good signal when it breaches 1. But you can see that it is definitely elevated, which is good to see. However, we don't see the kinds of big time spikes that we've seen in past bear markets. Of course, that doesn't mean it's not a great time to buy right now. It could be. It just means that as a whole, insiders aren't as bullish as they were back in 2020, 2018, and definitely not as bullish as they were in 08, 09. However, there's one other way to look at this data, which I think is really interesting, and that is just to isolate out all of the other insiders except for the CEOs. The CEOs should know more than anyone else about the business, so it makes sense that their insider buy-sell ratio would tell us a little bit more than using all of the insiders. So let's take a look at what that ratio is telling us. And now we see a little bit different of a picture. So again, here's our magic line of 1. Anything above this would be a very good buying opportunity, at least based on history. And again, we see several spikes back in 2008 and 9. Here we are again back in 2018, spiked above 1. The COVID crisis of 2020 actually spiked even greater than it did in 0809. That's just the CEOs only. But interestingly enough, we actually see that recently, so this would be as of the end of last month, the insider buy-sell ratio for CEOs only reached 1.4 times. Now that ratio has fallen off a bit lately, so this could be a bit of a signal that CEOs are getting a little bit more worried about inflation potentially. But the point is that as of last month, more CEOs were buying the stock than selling it. Now, does that mean it's a foolproof time to buy stocks right now? Maybe, maybe not. We don't know exactly what the future holds. However, it is extremely encouraging to see this ratio over 1. We'd like to see all of the insiders start to get over 1. I think that would be a clear bullish signal, but I think for now at least, we can conclude that a lot of CEOs are seeing value in their own stocks. And if the market sell-off continues, I would anticipate we're going to see insider activity ramp up even more. So subscribe to the channel if you're not already, and I may post a couple more videos in the future just updating you on how this ratio is acting. If you're interested in looking at it for yourself, you can sign up for Guru Focus. That's where I got this data. I'll put a link in the description below. For more data-driven investment content, check out some of my other videos. YouTube thinks you're going to like this one right here. So click on this link and I will see you in the next video.